Alright everyone, this is T. It is November 22nd, Monday night. Market just closed up a few minutes ago, so quick video here for y'all in the mastery. I'll put this on YouTube for those of you that subscribe to the channel, and we're on a roll here with the videos. 365 videos in 2022. Maybe, just maybe. But keep in mind, we got a short week this week, so expect a little bit of nonsense. A little bit of selling pressure here today, and I'm all about it. I welcome it with arms wide open, as Creed would say. So S&P 500 finishes the day down a blistering 0.3%, and we've got to keep in mind we haven't dipped to the daily 21 since early October. It's been well over a month. You haven't even gotten that healthy little reset. So you gotta be prepared for that, right? You can't be swing trading stocks to the upside and then be all, thrown off here if the market comes in a little bit. We're at 3.8 AR. Guess what we tend to do? At the very least, dip to the 8. Well, that's all we did today, so it's not really all that much there. But even if you come down to the 21 in the context of a bullish uptrend, it's all normal stuff, mi amigos, mi amigas. So my thought process is bring the selling pressure on here so long as the weekly squeezes don't lose structure. I'm not trying to get paid today. I'm not trying to get paid this week. I'm just trying to get paid from some of the best uptrends out there into December, into January. So we've already got some Apple, some Amazon, some Netflix, a little bit of Tesla here. But any selling pressure, to the extent that the weekly time frames aren't getting blown up here, I view that as an opportunity for some of you to potentially build your swing positions, and then for us over here to potentially add to those positions. But that's my opinion here, my mindset. Unless this weekly squeeze completely breaks structure, I think into the end of this month, into early January, this takes you into higher prices. So one of my favorite spots, even though we're down about 2.5% today, is Amazon, because today's 2.5% dip doesn't change a damn thing about the weekly structure. It also doesn't change anything about the 3-day time frame structure. It also doesn't change anything about the structure of the daily chart. So I think for those of you looking to get long Amazon, if you think Amazon's weekly squeeze is going to take it into 3,900 to 4,000, you start to get a little bit interested here, as we're potentially pulling back towards the buy zone. So same conversation applies here to Apple. Big push today, comes in towards the end of the session. It's still crazy extended. Not crazy extended, it's still extended. This comes into the 8, this comes into the 21. There's your window of opportunity. That doesn't change the structure here of your weekly or your 3-day squeeze. So hopefully this all makes sense. And what this all kind of ties back to is that I've been trying to pound the table on for the last couple of weeks here. Find a trend, find some squeezes, but then for the life of me, build your position at the 21 EMA. So if you're getting long Apple back here, and you're catching this push, you don't really care too much about today's flush. You're still sitting on good profits. If you got long Apple today, you felt every bit of that. So now if Apple pulls back to the 8, you're really taking on some heat there. We'll still probably be profitable. So when you get long at the 21, managing your emotions throughout the course of the swing and the volatility, the ebbs and flows, just so much easier. If you're getting long Amazon on Friday, because it looks strong and it looks bullish and everybody's talking about it, you're feeling all of that. And think of how difficult this is. You've potentially chased this stock. Now you're sitting through a bit of a sell-off here, but this doesn't change the structure of anything. So as Amazon over here dips from +2 to the 21 EMA, it doesn't change anything. It just offers a better entry. A lot of times, though, you're not going to take that better entry because you're taking all kinds of damage from your extended entry back up here. So, very easy, I think, to work these squeezes when they just kind of continue to grind higher day after day. A huge part of this, though, is picking your spots wisely. So if you get long Amazon back here, you can comfortably sit through the selling pressure today. If you're getting long on Friday, these hurts a little bit, right? So, quick video, just wanted to bring home that point here. Any selling pressure over the next few days, so long as the structure of the weekly and 3-day squeezes doesn't get blown up, I'm all for it here. So I'll show you our positions. So Netflix, we're coming back towards break even. Still like the trade. So in the options room, we're at 650, 645. And in my mastery, we're down here with the Delta 20 puts, 620, 615. So with Netflix, you have a good daily squeeze here. I don't think you need to rush into it, but wait for momentum to start to shift back towards the upside. Everything cleans itself up here in the daily squeeze. I think it continues to push higher. For Apple, let's see on Apple here. Everything looking good. We got December 31st, 150, 145, and then we have January 21st, 150, 145. And then for the big Zonster here, right? So I'm giving back some open profit today. Like, the open profit ain't mine anyways. And the structure didn't change here. So 3,400 short put in the options room and 3,350 here in the mastery. So major points being, when you're trying to catch a weekly squeeze, a daily squeeze, a 3-day squeeze, very, very important to try to build your position as close to the 21 EMA as possible. When you do that, when we get these flushes, the flushes that don't change structure and otherwise are just probably buyable dips, you can comfortably sit through that because you're sitting on open profit. Versus you're chasing up here, you're not having a good Monday morning. Put it that way. So, all that being said, by design, when we place these trades in the options room and in the mastery, by design, we're making sure we can comfortably sit through any price action like this. We're going far enough out to expiration. We're going with put credit spreads. And we're taking good entries. Everything we're doing here is try to put us in the best position to catch the move from point A to point B, while at the same time getting a good bang for our buck, so we're getting a good risk reward and a good return on that risk. But at the same token here, we want to be able to comfortably tolerate any kind of nonsense we have to. So we're in pretty good shape here. And potentially, see how Amazon is into the end of the week. Netflix might potentially look to add to those positions. Going to be patient here. And then Tesla, up about 2% here today. I think gearing up for a move into a brand new all-time high. Any selling pressure early tomorrow in Tesla, I'm looking to pick up a little bit more. You have your first 4-hour squeeze here since the big nasty started. Since the big nasty push. So 4-hour squeeze back here in early October gives you the crazy push. You pull back, brand new 4-hour squeeze. This comes into 1100 tomorrow. I want to add to my current position with the mindset that that 4-hour squeeze ultimately fires long, giving you that next pusheroo towards brand new all-time highs. But we are sitting on a little bit of open profit here from our mastery trade with a December 17th expiration. Where the heck are we? Here we are. 1020, 1010 credit spread. But that's what I got for y'all here. I think for me, with my goal being to try to give you all the best value as possible. And even if you're not in the options room or my mastery, as a subscriber, I want you to take value from these videos and value that you can apply to your own trading. So I think important for me to jump on the mic on days where the ideas I've been discussing are coming in a little bit. Way more important than putting together a video when I say, hey, I'm getting long Amazon, and then 3 days later Amazon's just rallying. Makes for a good video. But a huge part of trading is managing the emotions. And a huge part of being able to manage your emotions efficiently is taking good entries. So I think this all kind of ties in together here. But in my book, nothing changes. Weekly squeeze, Apple, Amazon, I think December, January, they continue to go higher. So today's flush doesn't change anything as far as the structure goes. And remember, the Qs and the S&P, you haven't touched your 21 EMA in well over a month here. So potentially you get that continued flush this week. We hit our 21, then we chop a bit, brand new daily squeeze, then the party continues. We'll take it day by day. I'll be live Wednesday morning for another hour of pre-market prep. But I did think important for me to jump on the mic here today and at least explain how I kind of manage emotions on a day like today. And realistically, frankly, there really aren't any emotions to manage. What did I do a few weeks ago? I built swing positions for the Amazon weekly squeeze. I'm profitable. I got a good start here, but this hasn't unfolded either which way yet. A few weeks ago, I'm building my positions in Apple to get positioned for this weekly squeeze, taking you into 170 plus. Now you're down a bit here today after your nice push, but that doesn't really have anything to do with catching that weekly squeeze. Same thing goes with Netflix, same thing goes with Tesla, so hopefully this all makes sense. If it does, let me know down in the comments below. If it doesn't make sense, also let me know. But a good entry is everything. A huge part of trading is managing that space between your ears. It's a much easier job to do that when you're not taking awful entries at crazy extensions and taking all kinds of pain on these pullbacks. So when Apple, when Amazon, when Google, etc., when they flush like this, the position I want to be in is, okay, I'm profitable, I'm giving back some open profits, but I'm still green. Now I can potentially add to the trade versus, wow, I got long Amazon on Friday, and now I'm getting my choppers kicked in. Not the best way to start Thanksgiving week. So I am thankful for good entries. But hopefully this all makes sense. Let me know down in the comments. I'm looking forward to Wednesday's pre-market prep. So that will start at 8:45 a.m. Eastern, 7:45 a.m. Central. And I look forward to seeing y'all then.